All right, good afternoon, folks. Today is June 8th, 2022, uh, Wednesday. So I just wanted to give some updates on what's going on. Let me go ahead and share my screen. There we go. Okay. So today we're seeing markets are basically just chopping around today. VIX is down. Our UVXY lottos, we exited earlier today at a profit. We may have left a little bit early. It looks like I left about, we got out at 38, and right now those puts are at like 41 or so. So, there's some money that we left on the table, but again, profit is profit. We made 65% in one day. So there's no need to be greedy and hold on to it. I did roll a portion of the profits, about 10-15% of the profits that I made on this on this one UVXY trade. I did put it into some XLF calls. Not sure how wise that decision is, but I kept, purposely I kept it very small because I know my own tendencies. If you look at our past trades for the past 2 weeks, we've had a very good hit rate. We've won a lot of our trades in the last 2 weeks, and maybe it has gotten to my head. Maybe that's why I was eager to get into this XLF calls. I'm not sure, again, if this is going to pay out or not, but I know my own tendencies, so I kept that position very small. Again, 10% of what I won on my last UVXY trade. We got in, I believe, on UVXY, the 12 puts for June OPEX. We got in at 23. I got out at 38. So some of those profits rolled it into these XLF calls, the June 30th, for 37, I believe. All right, 37 calls. I got in, I think, at 13 cents. All right. Let's just go over what's going on in the broader market. Let me just pull up the charts, pull up the 1 day. That's UVXY. We're seeing some strength, especially in tech names. Today, the day actually started out with just oil, XLE, in the positive. Now we have some more participation, consumer discretionaries, retail. I believe also biotech was in the green at the start of the day. So it was biotech and oil, and now we're starting to see some other sectors turn green, 2 more. Will we see other sectors turn green as well too? Who knows? Maybe, maybe not. But I think, it's difficult. So again, the easy trade from I don't know how many weeks, for the last 2 weeks, I've said the same thing. We are in a major downtrend. We're just facing a temporary correction, a bear market rally. So all the trades that we do going long is very difficult, all right? Again, the easy trade would be to be patient, wait until we get to these higher levels, and buy put spreads 3 to 6 months out. That's the easy trade, okay? All this, here we're really just trading the noise. And again, last 2 weeks, trading the noise has been profitable, but it's getting more and more difficult. All right, so it's not easy. All right, again, the easy trade is to wait and buy 3 to 6 month put spreads. So that is what I see. Last night, not last night, but early this morning at 5 o'clock in the morning in the Eastern time zone, I did post on our Discord as well as on my Twitter about a large order that came in, the 4250, 4300 call spread for this coming Friday. expiration in 2 days. Somebody spent 3.7 of premium to potentially make, a total payout of 50. All right, so their profit would be the difference between those two numbers. So around 46.3 or so per spread. So somebody bought 800 of those spreads. They spent about a little less than 300,000 in premium, and could potentially make about 4.7 or $3.7 million from that. Now, it may not appear so big, but for something of that size, and especially with the order flow, it was very small, it was very sudden, like as if it was algorithmically done. I think it's definitely an institution or some hedge fund looking to profit off of either VIX deflating, maybe after the CPI number comes out, maybe they have a belief that the CPI numbers won't be so bad. I think more likely than anything else, it might be an institution who has hedges. So they may have some puts, or they may have sold some calls, and they're also hedging their hedge with these call vertical debit spreads. I think that's what's most likely here. We'll see if that will pay out or not. That may be worth a lotto for us to piggyback off of. If I do piggyback off of that trade, I will not initiate that trade until probably tomorrow at the end of day. I think that would probably give us the best risk to reward, especially since we are facing some hedging volume here. Around this 4150 zone, we're seeing some hedging happening here. So if, for example, if tomorrow we go a little bit lower, I think we might be able to get into some better spreads. And if CPI number comes out a little bit better than expected, then I can definitely see VIX deflating and the markets going up. One thing that I still want to show people is that, and I've been showing this for a while now, if you look at June OPEX, okay, we have still significant in the money puts in the S&P 500 cash index. I mean, these are the ones that are out the money, but if you start going in the money, you see here, look at these open interests. We have here 4,200 at 44,000. We have 4,250, 26,000. And again, nominal values, these are 10 times bigger than SPY. So for nominal values, it's like there's 260,000 in the money puts at, let's say, 425. It's like that in dollar equivalents. So 4,300 at 44,000 in the money puts, and it goes on and on. Every 25 to 50 points or so, there's 20, 30,000 in the money puts, all the way up to actually 4,600. 4,600, there's 20,000. Actually, I think there's more. Is there more? Last time I checked, I think it went all the way up to 5,000. Yeah, look at that. At 5,000, there's almost 64,000 in the money puts at Delta 99. So imagine if those get sold off. Imagine if these get sold off. Now, of course, there's a lot of also calls as well too. I don't think it's going to be a straight line up, even if it does go up to any higher level. I actually see around 44.50 there being some significant call walls where people may start taking some profits on their calls. But that's why even if it does go up, it's probably going to be a choppy way up. I mean, look at these open interests on calls as well too. So I suspect that these people will also take profit on the way up. So it won't be a straight line up. It'll probably be a very choppy way up, even if it does rally, if it rallies. Okay, the VIX would have to fall for this to happen. Okay, if not, if the CPI number comes out really hot, let's say inflation is hotter than expected, then yeah, all this is kaput. You know, the VIX will go up. There will be a demand to hedge, and people will buy puts. The market maker will have to take those, sell those puts, and then short the underlying to remain delta neutral. Okay, so these are all big ifs. I'm not trying to predict the future. That's what amateurs do. Amateurs try to predict the future. What I'm trying to do is just anticipate possibilities. All right, we anticipate possibilities just like a great chess player. You want to think 5 or 6 moves ahead. It doesn't mean that you know exactly what your opponent is going to do and you know the next 5 steps. It's not like that at all, right? It's you're anticipating they might move this piece to that square. They might move piece B to another square, but you're just anticipating and planning just in case if that happens. So that's the same thing what we're doing here with the SPX options chain. All right. Let's also take a look. I know everybody, front and center, people are talking about oil. I know we had some members ask about what's going on in oil. Oil had some crazy price action yesterday. I keep saying the same things. I always repeat myself because there are some things that are very important. Trading oil right now is going to be difficult. All right. If you wanted to be long in oil, you should have been long way back. Trying to open a new position now, you don't really have an edge. All right. And I keep saying this. The easy trade is to look for gasoline inventories to go up, gasoline prices to break down. Then we'll probably see crude oil break down, do a back test, and on that back test, that's when you want to short oil. Okay. Now, I don't suspect that will happen until at least October or November. All right. Yesterday, at the end of the day, I should have recorded this, but at the end of the day, we had one of our own members who is an expert in the oil business. He used to work for Aramco. Explain to us kind of the dynamics of what's going on in the oil markets. And he also confirmed, too, that around October, November is when a lot of refineries shut down to get ready to make a winter blend for gasoline. And so, what I suspect, and it goes with my thesis, I suspect that they will probably pump gasoline out into the markets before they shut that down. And usually to get a refinery ready for the winter blend, it takes about 2 or 3 weeks. So I suspect that they will pump gasoline into the markets before they close down so they can still generate some profit and still make sales while they're closed. And that might create some supply shocks within gasoline on supply actually increasing for gasoline. And when that happens, I can definitely see gasoline prices coming down, and then we might start seeing some cracks in oil prices. But as long as this gasoline futures is going up, I don't care what the story is on the media. I don't care what people say. As long as this is going up, in my opinion, the floor on oil will keep going up as well. All right, as long as that as long as the crack spread is profitable for refineries to buy oil and sell gasoline, and as long as that margin is healthy, I mean, again, there's going to be some demand for oil. Every pullback is going to get bought, as well as long as gasoline still remains in its uptrend. Okay. So that is at least that's what I see. Okay. One other thing to keep in mind also too, a lot of times, sometimes, currency markets can front run some other moves in the market. And, the theory here is that usually your most sophisticated traders in a trading operation at institutions are currency traders. Usually they're your most analytical bunch. And so, so there are instances in the market where we see moves happening in the currency markets and they spill over into equities. For example, about 2 or 3 weeks ago, I was calling for a bear market rally, and people looked at me like I was ridiculous. But the reason why I thought that was because we were seeing the dollar turning down. All right, so we were already seeing that in currency markets, and it spilled over into equities. I think with oil, could the Canadian dollar maybe something to look at for the oil markets. I think if the Canadian dollar comes down to here and breaks through, I think then we might be seeing oil at 130 or so. Okay. So I think this will be a leading indicator. If this keeps going down and busts through, we're going to see 130 plus in oil. If for whatever reason, USD Canadian dollar, if it starts shooting up, and if the Canadian dollar starts coming down, then in that case, I can definitely see oil making a small retreat. But again, I think it's mostly about gasoline, and I think here we'll see what happens if the Canadian dollar reaches this point right here. All right. Let's also take a look at our XLF trade. Now, okay, so let me go over why I went along on XLF. So overall, what I was trying to do was really buy the dip on equities this morning. Okay, so I thought I was being very clever by choosing XLF. XLF right now, their call options have a lower IV for the next, from what I checked, for the next 4 or 5 weeks. So I thought I was being clever. Also, too, for the last few days, I've seen a lot of components for the XLF see some institutional accumulation, especially in block share purchases. One thing I noticed was also on JPM, I saw some accumulation here as well as here. So there was a huge block purchase here, and I saw some accumulation happening at these levels here as well too. So if those get defended, I can definitely see, the banks making, a higher move if that continues. Now, if it breaks that level, then we're definitely proven wrong. All right. So at the time when I took the XLF trade, I thought, well, it'll be easy to know when you're wrong. So if XLF ends red today, if it cannot end at the highs, at break even, or at green today, I'm out. That it pretty much means we were wrong. So, or if any of these components that I'm looking at, like for example JP Morgan, if JP Morgan closes under this level where I saw some accumulation, definitely getting out. Another bank stock that I saw some accumulation in was in Goldman Sachs. Same thing, same pattern around here. Huge block trades, also some institutional accumulation happening right here as well too. All right, at that 317, 316 level. All right. Also, same thing for Morgan Stanley. I saw same pattern, large block trades, institutional accumulation right here as well. So if any one of these or all of them close below that, and or XLF cannot close at the highs of the day, close to break even or in the green, I'm going to get out of those lottos at the end of day today. Okay, so that's my plan. Again, I only used about 10-15% of the UVXY profits from the last UVXY trade, so it's not so bad. But I think definitely this was a trade I normally would not have done. But I think the win rate and the winning streak that I had the past 2 weeks, I think it got to my head a little bit. The kind of like the Midas touch curse, and I thought, everything I've most of the things that I've bet on, have gone my way. And I think I made a little bit of a premature bet on XLF. We shall see. That's why mindset is so important. Mental capital is so important. Okay, having the right mindset. After big wins, I think it's a good idea to scale back your trades and really reassess what's going on with a clear head. Because if not, it can get to you. And even with me, with the experience that I have, it still got to my head. So that's something that we as traders always need to work on a daily basis. So that's that. So that's the trade that I had. Oh, somebody in the one of our members actually inversed me on this. They actually bought puts. So we'll see who wins. Okay, they bought some puts. I believe their puts are at 32 puts. They bought it, I think, at 17 or so. Same expiration, June 30th. So we'll see. Maybe they win. Maybe I win. Maybe we both lose, and they just both expire to 0. Who knows? There's no crystal ball to this. Again, I'm gonna get out if we can't close around here at the highs of the day today. I'll probably lose like 3 or 4 cents per contract. I don't have that many contracts, so it won't be that bad. But we'll see. We'll see what happens. Let's take a look at currencies as well. Tomorrow there is an ECB meeting. The European Central Bank meets, and they will set their interest rate. It's Europe's version of the FOMC. I suspect that they will continue their tightening. Lagarde, who's the head of the ECB, so she would be like our Jerome Powell. She's one of the more dovish bankers, central bankers. I don't think she's going to remain dovish. I mean, with the inflation that Europe is facing, it's hard for her to remain dovish. And I think if they are a little bit hawkish tomorrow, we can definitely see the euro currency go up. Right now, I do have calls on the euro futures contract. Right now, I'm in a slight profit. It's for November. It's the November 116 calls. We'll see if that pays out or not. I'm hoping that it does. Let's see. Let's take a larger look at the chart here. Euro, USD. So as there's tightening, the reason why usually currencies go up if their central bank is tightening is because usually you could make more interest. All right. As interest rates go up, there's more of an incentive to hold that currency. All right. So that's one of my theses on why I'm long the euro. So we'll see. I purposely chose call options on the euro futures because I wanted defined risk. If you use a futures contract or a leveraged Forex position, you do not have defined risk. Because of the leverage that you use, you could potentially lose more than what's in your account if something really bad happens. So didn't want that to happen. So I bought calls, and the maximum that I can lose is the premium that I paid on those calls. So we'll see. We'll see if I get that or not. So we'll take that day by day. One of the things I also wanted to go over was one of our members also suggested a lotto. I know a lot of you like lottos, okay? Now, my warning on lottery plays is this. Anytime I say a lotto play, it means it's a high risk, okay? There's definitely a risk of this position just going to 0, getting wiped out within seconds, okay? So anytime I say lotto, it means, yes, the potential reward could be very high, but the chances of it actually performing is really low, and most likely it's going to go to 0. So position sizing, keep it small, okay? One of the things that one of our members suggested was Neo buying puts for the earnings release that it will have. Let me see. When is their earnings? Is it tomorrow? It is. It is. It's tomorrow before the market opens. So the last chance to get in for that ER play would be at the end of day today. Okay. One of the things that I suggested, what they suggested was to just buy puts. But rather than just buying puts, I was thinking about doing a vertical spread on this. And so I think today what we'll go over is just the basics of a vertical spread. So when you do a vertical debit spread, okay, first of all, all the legs are going to be within the same expiration. Okay, so it has a basic vertical has no calendar component to it where you're buying one option at one expiration, you're selling something at a different expiration. No, a basic vertical, it's all within the same expiration. But what you're doing is you're buying a closer to in the money option and you're selling one that is further out the money. Okay. So, for example, if you were to buy the 2018 vertical put spread, you would be buying the 20 put and you'd be selling the 18 put, right? So let's say, 83.21, so about what, 62? That's what you would be paying for this spread. Your max loss is whatever you paid for it, which is that 62 cents. And your max gain, your max payout is the difference between the strikes versus minus what you paid for it. So this would be $2 minus the 60 cents. So your maximum profit on this would be $1.40. So for 60 cents, you could potentially get a payout of $1.40. Okay, so that is how our vertical works. Generally, when you build a vertical, you want to be buying an option that has a lower implied volatility and sell an option that has a higher implied volatility. That way, you're using the skew to your favor. Okay, you're using that option skew because options, a lot of an options premium is based on its implied volatility. Basically, the price of the option itself tells you what the market is expecting as far as moves within that expiration. Okay, so obviously, if it's got a higher implied volatility, it means it's got more premium in them. Okay, it's more expensive. Even though the price may be lower, it has more of an implied volatility baked into its price. So generally, you want to buy the lower implied volatility and sell the higher implied volatility. Actually, that's the reason why on UVXY, for example, yesterday I told everybody that I entered into that UVXY December 15, 20, the 15 and 20 call verticals. Even though UVXY is down from where I bought it at, because I used the skew in my favor, I'm still not at a loss on that position. Okay, so that is how you can use options and volatility in your favor. So even if price goes a little bit against you, you're not facing that loss. Okay, so that's the power of using data and using math to really build an edge in your positions. Okay, so that's the basics of a vertical spread. And hopefully, in the coming weeks, I'll be able to, I'm also, making some courses right now for you guys to listen to, at your own leisure. And I will be going over how to build spreads in way more detail. So this is just the basic for you guys to kind of see the theory behind it so you can play with it yourselves. But again, I'll have a course out hopefully in the next few weeks, perhaps in the next couple of months, that goes over in greater detail of this. Okay. I see there's some of you who came in a little bit later. Welcome. If you have any questions, you can post them on the voice chat text. If you have any questions, I'll take your questions right now. If you guys want, you can unmute yourselves and just speak and ask questions directly. Just know that we are still recording. So if you're not comfortable sharing your voice, you can always just type in the voice chat text.
I don't have any questions. What's up, bro?
What's up? How are you doing?
I'm doing good. Just chilling.
All right. Well, I appreciate that, Magnus Vaughn. I see he said that he learned a lot today. Yeah, you're always welcome to come by. We have these right now. Our midday reports are scheduled for Tuesdays, Wednesdays, and Thursdays at noon Eastern time. We go over topics like this on those days. I put the recordings out on YouTube by the end of day so that you can review those, and you can go over anything that I've said, just in case if you miss it.
Hey, Mickey, Nunya.
Hey, Nunya, how you doing?
Hey, for some of these the newer guys, can you go over just like like very basic 101s about how to set up the spreads and what you're doing there? So, because most of these guys are used to taking like direction from retards that are just YOLOing playing naked options positions based on one tick or this line across that one, etc.
Right. Okay. So yeah, building spreads, and there's so many types of spreads, right? And today, all I went over was a vertical debit spread. I mean, there's so many different spreads. I use ratio back spreads. I use credit spreads, this spreads. So, trying to discuss spreads in one hour video is going to be very tough. Okay. But let me just go over the vertical debit spread that I just went through today. So again, we'll use the same example, that Neo example. Okay. So why even do a vertical debit spread? Because here's the thing. What if you have a directional bias, but you want to protect yourself and hedge yourself just in case if you're wrong. Okay. If you look at Neo right now, because there's a binary event that's going to happen tomorrow, which is the earnings release, the implied volatility on those options right now are jacked up. Okay. So whenever there's a big expected move in the market, you're not the only one that knows about it. Okay. You're not the only one. And to think that you're the only one that knows about it is stupid. Okay. Basically, the market has already priced in a huge movement. So right now, options are extremely expensive on Neo. Okay. And that you can tell by its implied volatility. All right. If you look at the chart here on Neo, well, today its implied volatility went down, but still, for the most part, its implied volatility, for at least for the expiration closest to the ER, which is this Friday, it's quite high. If you look at something that's more a month out, you can see the implied volatilities are lower. They're a little bit lower. Why? Because the binary event is for tomorrow. Okay, that ER is tomorrow. Okay, so even though, let's say you buy the 19 puts, and let's say this thing goes down, if it only goes down by 1 or 2%, if this thing only goes down to like 1960, 1980 after tomorrow's ER, this thing is getting wiped out. This 19 put is going to get wiped out. All right. It will still go down even if Neo goes down by 1 or 2%, because there's so much implied volatility that's baked in. So to reduce your premium, to hedge your position, you can sell the 18 puts. So you're buying the 19, selling the 18. So instead of paying $45 or $44 or $45 per contract, you're going to spend 22 or 23 on the full spread. All right. That way you're giving up less premium. So even if your options position goes to 0, well, instead of losing 44, you lost only 21, 22. All right. Now, on the flip side though, your potential profit though is capped. It's capped because what if Neo tanks? What if Neo like completely tanks tomorrow into 16? Well, you're capped at 18. Okay? Your maximum profit is the difference between your strikes. That's 19 minus 18, which is 1, minus the 23 that you paid. So that would be 77. So for $23, you have the potential to make 77 by end of Friday. That's still pretty good. That's still a 3-to-1 risk to reward ratio, and you're giving up less. You're paying less premium, and it's a hedged position. So instead of going unhedged, you can go hedged, and that's the whole point of a vertical debit. It is also to counteract some of the implied volatility crush. Because if your option values get crushed because the implied volatility itself gets crushed, well, at least you're short one option, so some of that volatility crush is going to work in your favor, not all of it work against you. Does that make sense? Nunya, did that explanation make sense?
Yeah, I
Makes
think
sense to
so.
me.
Okay. Any
Or I'm hoping it
questions?
did anyway.
Any questions on what I just said? Anybody want me to repeat what I just said? Any
I
questions?
actually kind of have a question. Maybe
Sure.
it will make sense. So you base your like going off of delta. That's like how much you'll gain per contract per dollar moved, right? So you're
Yes.
basically taking the idea of hedging against your put. Are you going in like similar deltas to have similar price movement on those contracts?
What do you mean by similar deltas? Because when you move down on strikes, your deltas change.
I just mean like are you trying to keep it to where one is like, for instance, you're sold one, you want a higher implied volatility so the buyer gets wrecked, right? And then you want a lower implied volatility for your put since you're buying that one, right? You're trying to keep it to where you're not going to just get wrecked. I don't know. I'm having a hard time wording what I'm trying to ask.
Right. Okay. So yeah. So basically, what ideally, when you buy a vertical debit spread, you want to be buying the strike that has lower implied volatility, and you want to sell the strike that's got higher implied volatility. All right. So that when there is this IV crush, a lot of that IV crush is working toward your favor and
Right,
not
the buyer's
against
gonna
you.
get wrecked.
Exactly. So that's why you want that. It puts a little bit more edge in your favor that way.
I guess what I'm trying to ask is, are you taking delta into consideration when you're doing these types of spreads to make
Usually,
sure that one isn't going too far, too much of a movement every dollar change, if that makes sense?
yes, usually I would be. And when I make spreads, I usually do it for 3 to 6 months out, and I use it as a hedge. Definitely, I'm using deltas more and to determine those strikes. But right now, this is a 2-day. It's either we're betting on a big movement here, so it's a little bit different when you're
So
just
it's really
lottoing.
just betting
Yeah,
on the IV.
exactly. This is more of a lotto, and I'm just trying to protect myself from IV crush if I'm wrong. And that's why I'm using verticals. But yes, for something that's a little bit more longer dated, like 3 to 6 months out. And again, if we get to a point where the market is, look at the VIX right now. VIX is spiking. The market's coming down. I don't know if we're going to get our higher levels, but if we do, and I start building those 3 to 6 month put walls, I will definitely then show you how to build spreads that are a little bit longer dated. Yes, deltas will be a lot more in consideration. But again, for a 2-day lotto, for a binary event, I'm mainly looking at these implied volatilities. I want it as close to as possible. I may even do the 20s and sell the 18s, or maybe even do the
And then I
20s
guess
and
I
sell
have
the
another question for you
19s or
too.
something. Yeah, sure.
With so you said basically by tomorrow, if you don't see that Neo's tanking like every other earning, and it's like at 1960, like you were saying, or whatever it was, are you gonna sell that put contract and just roll with the call? Or are you just going to empty everything out? Like, what is your game plan if it just kind of stays still?
Well, that's the that and I'm anticipating that, so that's why when I get in, I'm gonna get into with a spread. If I get in with a spread like the 2019 spread, if it goes to 1960, I'm probably going to be in the profit. So I'll take my profits then. If I'm dead wrong and just Neo just goes up, well, there's no point in keeping it. I'll just sell it and just take the loss and move on. And that's why it's a
I guess
lotto,
what
and
I
that's
mean is,
why.
do you just sell out your the one that's failing at that point, and then just write out the one that's winning?
I mean, you could, but you know,
You just got to work out the math or something.
exactly, and I got to see where it opens. So if there's still some premium on the put that I shorted, then yeah, I mean, or no, wait, yeah, if there's still some premium left, I mean, why not? I'll just close it out, and I'll just move on. If I'm dead wrong, most likely it's gonna be close to zero. So
Yeah, it wouldn't be worth.
exactly. I don't even know if it's going to be worth closing, but if it is worth closing, I'll just close it out, save my bullets for the next lotto. Again, I'm going to keep it really small. It's zero or hero, so just keep that in mind. Keep all your lotto small, all right? You don't want big drawbacks in your account. That's not how people who treat trading like a business would do it, okay? Can we take a look at RTY dumping? Yes, we can. Yes, we can. Let's take a look. You know what? And that member who told us about Neo, she did mention that she expects Neo to dump before the end of day, and it's actually playing out like she said. Good for her. RTY. This is RTY. It is dumping, but I mean, let's put things in perspective. It's still around. I mean, we've chopped around here now for what, like a week or two now? So, okay. I still think it's kind of noise, but we'll see if it has continuation. If it starts dropping down here, and I know there were a lot of accumulation in IWM, dark pool block purchases here and here. I suspect if we drop below here, people are going to probably cover or hedge an IWM. So either we're going to here or here, here or here. Everything in between, no man's land. So again, that's why it's difficult to trade this. The easy trade, like I said, is to be patient, wait for those higher levels, then short it via put vertical debits. That's the easy trade in the indexes right now. Anything before that is very difficult. Okay.
And what would you recommend for people who don't own 100 shares?
For that, even if you don't own 100 shares, you can buy put verticals.
So just don't sell calls. You would just buy everything.
Right. So, well, yeah. I mean, you don't have to sell calls if you don't have 100 shares. Actually, I don't have the trades on this Discord because we just started this Discord like last week. But if you go on to my Twitter, okay, Mickey Blindside, the Twitter, go to Mickey Blindside. That's my Twitter. If you go last month if you go to March or April, you will see how I built put spreads on the triple Q as a hedge for my SPY shares, and each one of those spreads was $100 to $125 with a maximum profit payout of $500. Okay, I cashed out between $250 and $300. So a little bit more than double. All right. But all you need is $100 to $125 for those spreads that I bought back in March, April. And you had a 1 to 4, a 3 to 1 reward to risk ratio. Next time around, I'm not going to be as timid. I'm going to try to buy $5 wide vertical put spreads at $50 to $75 per spread. Max payout would be 500. So I'm looking at more like 7 or 9 to 1 reward to risk ratios. So that's probably what I'm going to use if we get higher. I don't know if we're going to get higher or not. No one has a crystal ball for it. Again, I'm not trying to predict the markets. No one can predict this. Okay, anybody who says they know exactly what the market's going to be in XYZ time period, they're lying to you or they're crazy. Okay, nobody knows. But as a professional, what you have to do is anticipate. Much like a chess player, you anticipate your next 5-6 moves. Same thing. That's what we're doing here. We're anticipating the next 5 or 6 moves in the market, and we have a plan in place so that if the market does what we anticipate, well, then we have a plan, and we're not just reacting and we're not just panicking based on what the market does. That's the strength of planning ahead and using data, and that's what we stress here at Checkmate Trading. Okay? Any other questions?
None that I can think of.
Okay. In that case, let me go ahead.
I guess I do have one question.
Okay, sure.
Will there be? I don't know if majority of us have 100 shares in any of the major indexes. I would just keep that in mind while you're running through these, that majority of us don't have that much.
I am well aware of that. That's the whole reason why I haven't posted any of my covered call writing strategies. I write covered calls on my index shares daily, multiple times a day. So I purposely don't post those, knowing that most of you guys don't have 100 shares. Most of the strategies that I put and almost every trade that I've posted on this Discord is for anybody to do. You don't need a big account to do those trades. Those spreads actually help you limit the amount of capital you spend on each position. So those vertical spreads that I talked to you about, they actually help you with your capital allocation because you're putting less premium for each position because you're offsetting some of those costs by selling some options. So that's why selling options and being good at spreads is actually even more useful for people that have smaller accounts. Okay? So every strategy that I'm going over in these videos, every trade that I put on this Discord, I have that in mind. I know most of you guys do not have 100 shares of SPY, QQQ, or whatnot. I get it. And that's why I've been sharing a lot of these more options-based strategies as well as spread strategies with you guys. Hope that helps.
Absolutely.
Okay. All right, then. Right now it is 12:50 in the afternoon. We're going to call it a day here for the midday report. We will be back tomorrow, same time, noon, for our next midday report. At the end of the day today, I'll be back on voice chat here at the pit, and I'll take any questions, and maybe we'll look at some end-of-day lottos for tomorrow. Okay, guys? Very good. All right. You guys have a wonderful day.
Later, bro.